Alright everyone, and welcome back to the channel for another Bitcoin update. So, some brutal news has just come out in the past hour which has caused the stock market and Bitcoin to start majorly capitulating. On the daily time frame, we've already wiped out pretty much all the gains that we made from yesterday. So, what is the news update? What is the next move for Bitcoin? What are my price targets in the immediate short term? Let's talk about all this and more in this episode. I want to start off and talk about what is going on in the news today, because as you can see on the hourly time frame, we've clearly reacted to this news very strongly. So jumping into our first story, this comes from the Eurozone consumer confidence. Now, this is a neutral news report as this was predicted to remain stagnating. Basically, consumer confidence, I'm sure this is very self-explanatory. Europe consumer confidence has remained the exact same. It is no more bullish or bearish than it was from the previous report. When we move on to the US consumer confidence though, this is where it gets interesting. We were forecast to have a bullish increase, and not only did we have the bullish increase, we actually had a larger report than forecasted, which is bullish for the USD, bullish for the DXY. Nonetheless, this is a short-term bullish report with the consumer confidence going up. You can attribute some of this to increased consumer spending, potentially preparing for a recession, but nonetheless, it is what it is in the short term. That is supposed to be bullish. Moving on to the US JOLTS job openings, this is not of high importance, contrary to what investing.com says, but we have had a massive increase in the job openings, which you can argue is bullish or bearish. It's bullish because the economy is opening up, it's bearish because there's a shortage in the labor force. So once again, this is not the biggest story. Moving on to our last two stories for the day, these are the two most important ones. You have the CPI report for Spain that came out. This was forecast to once again have an increase in inflation. Previous report was coming in at 10.8%. We were forecast to have an increase up to 10.9%, and the actual data came in and said the CPI year over year was coming in at a 10.4% reading. A lot of people might get out of bed for this in the short term. However, I would like to say, you know, when you do look at this chart, you can see there have been multiple times where we have had dips along the way, and there's no doubt in my mind that within the next month or so, especially with the rising energy prices, the Spain CPI is once again going to shoot through the roof. So most of these were either bullish or neutral news. So where is the bearish news coming from? When did the markets get hit? Well, as you can see, unfortunately, it seems like the Taiwan military fired warning shots for the first time at Chinese drone near offshore island. And they also reported that the drone headed towards China after shots fired. So yeah, really not looking good. We've now got escalation with the war. As if all of this wasn't, you know, bad enough with what we've got going on, what do we have in correlation to this? Well, as you can finally see, the markets are breaking down on this news. If we look at the traditional markets first, if we head over to the DXY, you can see as soon as this onslaught of news came about, the DXY took a massive run to the upside. It has started to backpedal some of these gains. I wouldn't be surprised if we do backpedal a little bit more, but the traditional markets are not looking good. I know I don't normally talk about precious metals, but it's getting to the point where I want to talk about them slightly because we're seeing absolutely brutal capitulations in gold and silver right now. This is not going to be good for the traditional markets. The Nasdaq is coming down from this double top that we talked about. The SPY, as you can see, daily time frame, we're getting continuation just like we've been predicting, and the beautiful SPX fractal that all veterans of the channel should know by now. As you can see, we're getting further continuation to the downside. Absolutely nothing's changed. All of this is happening while the DXY is continuing to push up. On the daily time frame, it really looks like it's primed to once again come up and make new 20-year highs. The DXY, in my opinion, is going to be heading all the way up to 111 and 112. So as we're getting bullish continuation in the DXY, as we're getting bearish continuation in the stock market, as you can imagine, coming into the chart for Bitcoin, things are not looking too good. Now, this was the last chart that I showed over on my channel, and this was previously what I predicted. I made a video when we were all the way up here. In fact, I made videos when we were at 24,000. I made videos when we were at the top of this bear flag. But in the most recent videos I've made, we were sitting round about here, this 21,000, 20,500. I also made a video about around about this mark, and we predicted this. We predicted a breakdown. We predicted a breakdown beneath 20,000. As you can see, this is what we drew out: a breakdown and a bounce bounce back up to one of these important fibs before another leg back down. And as you can see, I mean, this is what we drew out. All we needed to do was just extend this up a bit, and this is exactly what is playing out right now for Bitcoin. So very nice. Instead of coming up to the 1.618 Fibonacci and getting rejected off this zone, we pushed up a little bit higher above the 20,000 region, grabbed some liquidity from some bulls that got over exuberant. I'm sure a lot of people tried to FOMO in at the 20,500 mark, the 1.236 fib, and we rolled right back down after grabbing that liquidity. Ever since then, on the 1 hourly time frame, you can see it has been a straight run back down. So there's a lot of volatility going on as of the time of recording this. I do want to say, keep an eye on 19,500. If you are watching this video and Bitcoin is pushing below 19,500, where do I think we're going to in the immediate short term? Well, 19,200 to 19,000. I've previously talked about these price targets before. We have, once again, down here at 19,000, the 2.618 fib, and pulling up this previous chart. I have literally mentioned this chart for over a month now. As you can see, we drew this out for a bounce at the 786 Fibonacci up to the 618, and what do you know, down here at the 786, 19,200. So we mentioned this zone of resistance, or we mentioned this zone as potential support coming down in the next couple of days. So once again, keep your eyes on this in the immediate short term. 19,200 to 19,000 is where I think we're going. That is not my next major price target. I've been saying this bear flag breakdown at 18,200 is where I'm personally targeting right now. But just so you know, if you are looking to enter a short right now, if you are already in a short, be careful if you are operating on high leverage as we do come down to this 19,000 to 19,200 region, because this could be a large area of support, especially when we clear up this chart. And you can also see down here at the 786, we've got a lot of touch points where this could be flipped as support at any moment's notice. I personally don't think so, but could another bounce happen? It is definitely certain. As you can see, this is what we drew out. The price target was 24,000 when I initially started talking about this fractal. We posted this about 2 weeks ago, and once again, as you can see, that we were talking about this bounce on the 786. We actually came down almost to the 786, and we've already got rejected off the 618. So what I'm really showing you here is, hey, drawing off fibs, low to high. What do you notice? We broke down beneath the 618, had a daily candle body close, came back up to it today and yesterday, and we've got absolutely booted back down. Looking at Bitcoin in another chart though, I think this is one of the most clear-cut ones. Super simple. We don't need to do a bunch of TA today, dive into a bunch of clever TA. I think that sometimes the simple TA is right there in front of you and is the most effective. What have you got right now? Well, you've got this bear flag breakdown. You've also broken beneath the floorboards, and you've come back up, and it looks like this uptrending line of support, it might be another way that you can do it. I think maybe if we come over to the 4 hourly time frame, you can actually draw something like this from these touch points, and then you can see this is literally previous resistance, or previous support rather, flipped as resistance. So once again, this is textbook. You really don't need to, have a million and one different indicators on your chart to see what's going on. We've done pretty well so far just by looking at the plain and simple TA. We've been calling these bear flags after bear flags after bear flags. Every single one of these, super simple. When it's literally this simple, it is what it is. You've got previous support, flip resistance. Bitcoin is going to continue with this breakdown, in my opinion. Looking at the oscillators in the lower time frames, it looks like the MACD, I mean, it's not doing too much. There's really not too much momentum coming in right now because we haven't taken out the lows yet. So like I said, that target to keep your eyes on is 19,500. Some of these oscillators are going to gear up a lot more momentum as we do come down to these regions. MFI is pretty beat down on the daily time frame, so I'm definitely expecting one more last exuberant move to the downside before maybe a little bit more of a bullish bounce. But like I said, higher time frame, 17,500 is going to get violated. The next leg to the downside is right around the corner. Squeeze bomb continuing to move down despite the most recent bounce. If we head over to the 4 hourly time frame, it looks like the squeeze bomb is about to flip bearish on the 4 hour. The MFI, this is beautiful. MFI and MACD are both quite high up. In fact, MACD has almost crossed the heart line before it started to head back down, and the MFI is currently sitting at 56 on the 4 hourly time frame. So the lower time frames, we do have a lot more room to move back down before we can have anything like a bounce. So like I've been saying, you know, keep an eye on this 19,200 zone. I don't have a crystal ball. This may be the next zone that we do bounce from, but the next macro move, the next higher time frame move I see is the move back down to 18,000. It's likely we get a bounce from there back up to 19,000, maybe 19,500, 19,200, somewhere around about here before, in my opinion, we take out the floorboards at 17,500. A lot of volume starts coming in at those lower price targets, and then that, my friends, is where I think we finally pivot back down to these 16,000 price targets for Bitcoin, these $14,000 price targets that I've been talking about for so long now. So keep your eyes on this. Like I've been saying, this is what I've been calling for months and months and months now. On the higher time frames, this is such a beautiful chart. If you look at this, you can see, you know, we were in a massive falling wedge. The floorboards of this were taken out. We broke to the downside of this. We came all the way back up. And just like we've got in the lower time frames, in the higher time frames, this is what we're faced with. We've got previous support flipped as resistance. We've got all this bearish news coming in. And with this, it just looks like the markets are going to continue to tank to the downside. So I think I've covered pretty much everything I want to talk about today. Like I said, this really wasn't one of my longer videos. We don't need to do a bunch of deep diving into every single one of these individual charts. When it's black and white, it's black and white. So there's no need to overlook into these things. A quick update on the VIX as well. The VIX on the daily time frame, the last time we updated this, we said we obviously opened up about 5%. It looks like today we've got a tiny bit of continuation. You know, it's still round about the same region we were at yesterday, but it is also nice to see that we are, you know, hovering above, and we're continuing to hold strength, even though we're breaking out so strongly from this falling wedge. So with the VIX heading to the upside, I expect more volatility coming into the markets. Let's check out the fear and greed index before we do wrap up this video. And this is interesting. This has moved up quite fast. So the last time we talked about this, I believe this was in... yeah, this was yesterday's episode. We updated this 21 hours ago. We were sitting at extreme fear. We were at 24. And with this tiny relief rally to the upside, we've now come back into fear, out of extreme fear, up to 27, which is very funny. I mean, if we go down to the daily time frame, this is what we lost a lot of fear from. So very funny how we've come right back up to the 618 and now we're getting booted back down. Like I said, hope you found some value in today's video. That's all I've got for you today, my friends. If you did want to follow me over on Twitter, it is here at 618_cowboy. But that's all I've got for you today. I'll be keeping you up to date with what is going on with Bitcoin and the stock market. As always, my friends, Cowboy out. Peace.